I want to get started investing in real estate, but I need to start my LLC first. Well, maybe. I am not an attorney and I am not a CPA. However, I have been investing in real estate for 10 years now. So today I want to share my personal perspective about a common question that I hear from new and growing real estate investors. Do I need an LLC? So today we're going to go through what an LLC is, the benefits of an LLC, the downsides of an LLC, and finally we'll come back to the question, do you really need an LLC to invest in real estate? So first of all, what is an LLC? An LLC, or limited liability company, is a business structure that combines the legal protections of a corporation with the flexibility and pass-through taxation of a partnership. The owners of an LLC are called members, and there can be one or many of them. Okay, so the benefits of an LLC. There are three main benefits to an LLC. Benefit number one, limited liability. It's right there in the name. This is the major reason that people get set up with LLCs. If you get sued, an LLC may help contain the damages just to the assets within that LLC. So if someone trips and falls on your property and they're coming after you for money because of that, and the judge rules in their favor, you have to pay them money. But hopefully it's only money contained within that LLC. So the equity in that property that's in that LLC and in the bank accounts related to that LLC, it's not going to affect your personal residence. It's not going to affect your personal bank accounts. If you have the LLC set up correctly and you run it correctly, you're keeping all the money separate from your personal life. So there are ways around the LLC. It's called piercing the corporate veil. If you are intermingling funds all the time, if you're not following the rules of how you need to run your LLC, it might not actually protect you. But if you're running it the right way, an LLC can make sure that any damages to you in a lawsuit are contained just to the asset or assets that are held within that limited liability company. Benefit of an LLC number two, tax efficiency. So if you're going to have a business entity for your real estate, LLCs provide a really simplified tax experience, especially if it's a single member LLC. So that means it's just you as the member of the LLC, or maybe you and your spouse. This allows you to put all the income and expenses from that LLC, just kind of passes right through your personal tax return, and you're not being double taxed. So you don't have a corporate tax and then your individual tax. It's just all going straight through your individual tax returns. Now, it's really important to note that if you do have a multi-member LLC, if you and a friend or your dad or whoever decide to come together and form an LLC, you do have to do a separate business tax return. So some of the simplification of the LLC goes down at tax time if it's a multi-member LLC. However, there are ways around this as well. So I partner on some of my real estate with my great friend Mindy, and what we do is we each have our individual LLCs invested together in the property through a tenants in common or TIC agreement. And if you want to learn a little bit more about that, I have a past video about ways to partner in real estate where I talk about a few different ways, including the tenants in common method for partnering in real estate. So go check that out. Benefit number three, operational efficiency. So LLCs are really generally easy to set up. They're pretty inexpensive to maintain. There's not a lot of paperwork to maintain them over time. This can vary state by state, so definitely check with a lawyer and or CPA in your area. But generally speaking, LLCs are a lot more simple to set up and to maintain than other types of corporations or business structures. All right, so far LLCs are sounding pretty good, sounding like a very useful tool, but let's talk about a few of the downsides, especially for newer investors, of having an LLC. Downside number one, LLCs are not a cure-all. They're not a magic pill. You can still get sued and you can still lose. Hopefully the damages are just contained to the assets within that LLC. But again, as I said before, if you're not running things correctly, if you don't have separate bank accounts for your personal versus your LLC, and the attorney can pierce the corporate veil, then people can still come after your personal assets as well. You really have to make sure you're setting up the LLC correctly and you're running it correctly. So just remember, don't set up an LLC, forget about it, do whatever you want after that, and assume that just the fact that you have an LLC is going to protect you from losing money. Unfortunately, there's always that risk, and you do have to stay on top of the correct way to run things. Downside number two is financing. The best loans out there, as you'll hear from many people, everyone's very excited about getting as many conventional loans as they can, because those are the best loans in terms of the interest rates, the loan term, et cetera, et cetera. You will not be able to get loans on properties held in LLCs. They're going to have to be held in your personal name. If you hold properties in LLCs, you likely have to get commercial lending on them. This means higher interest rates, sometimes higher fees associated with the loan closing costs, and definitely shorter terms. You're maybe going to get that interest rate for 3, 5 or 7 years, and then you'll have to refinance, and the loan is only amortized over 20 to 25 years. So that means higher monthly payments. So those conventional loans are really ideal whenever you can get them, and that means you have to finance the property in your personal name. Now, some people do finance the property in their personal name, they close it that way, and then they quitclaim or transfer that property to their LLC. And this can work, but you have to be careful. Most loans have what's called a due on sale clause. And if the lender finds out that you've moved the property to your LLC, even though it's an LLC owned only by you, they could potentially say, hey, you have to pay us back for that property, you don't own it anymore. The best way to get around this, if you really want to transfer your property to your LLC, is to speak with your lender about it. I actually have worked with my lender on this. I reached out to them after a couple months of paying on a loan, and I said, hey, my attorney recommends I hold this asset in an LLC. It would be just me in that LLC. I'm still paying from the same bank accounts. What do I need to do? And they gave me a form to fill out. So be forthright with your lender. Don't try to hide from them. Go ahead and talk with them and make sure you have permission in writing to transfer that property to your LLC after you've gotten that beautiful conventional financing. Downside number 3 to LLCs, people use it as an excuse. It's just like trying to come up with your business name and logo and get business cards. Those aren't the things that are going to build your business and generate wealth. So if you're using an LLC, or the fact that you don't have one yet or you don't understand them, as an excuse to get started, then it's holding you back from the actual wealth building. And it's funny because in the beginning, most of us don't have enough wealth to actually need to protect anyway. There's not enough money in those properties when you buy them at first, and they're leveraged and they're not cash flowing that much just yet. There's not enough money there for most people or attorneys to go after you with a lawsuit. So using an LLC as an excuse to not get started in real estate is really funny, because you're keeping yourself from building the wealth that you would actually need to protect with that LLC. So make sure you're not using the LLC as the reason to not get started. Push that worry aside for just a little bit. You can figure it out as you go. Get that first property under your belt, and of course, be doing your research, talking with attorneys and CPAs along the way so that you know when it's time to actually get that LLC started. So, should you start an LLC? Maybe. Again, I'm not an attorney and I'm not a CPA, but here are 2 things to think about in terms of ways that you're protected when you first start investing in real estate. First of all, leverage. This is one of the reasons we all get into real estate. You can buy a $200,000 property with only $50,000 or less down on the property. So you don't have to put out every dollar required to own and manage that asset. This means that there's not that much for people to go after at first, as we just talked about. The fact that you're using leverage to invest in real estate automatically means that you're not starting in such a high equity position that people might be coming after you right away. You have a little bit of time to figure this out. Second of all, insurance. We all know that when we're going to buy a property and get it financed with a lender, the lender is going to want you to have insurance on that building. On top of the normal insurance, and you should definitely talk to your insurance provider about what types of protections you want, but on top of insurance for the structure, I also get a general liability insurance. So this provides some protections against things that could happen in, on, and around my building with other people involved. It's another way to protect yourself and make sure that if something happens, there's some mechanism and some money that could help protect your assets. LLCs are a helpful tool, but do not let them keep you from getting started. You might not need one right away, but what you do need is to get started on your wealth building journey as soon as possible, because trust me, it will change your life. If you have any questions, leave them in the comments below. I hope this video was helpful, and if it was, please like, subscribe, share, but most importantly, keep learning, keep growing, and have fun.